Out of the 4 jobs every month reported, 4 to 5, only one of them was real. So people are not working and companies are not hiring. We got to fix that in 26. Bad economic news is good news for interest rates, which is great for housing and mortgage-related businesses. Banning our money supply because the Fed has been restricted. I'm going to explain that. Credit card loans, car loans, those are short-term borrowing rates, and they are low right now. Microsoft and Google came out and said, we're not going to reduce our billions of dollars of spending. Existing home sales, 4 million home sales annual rate. That's with a little drop. Hey, it's KP coming to you live from Corona, California. It is 3:30 on the West Coast. Just cut a video for 15 minutes, and the audio was terrible, so I'm going to try and shorten it. We have, everyone's kind of doing their thing this year where they start to talk about themes for 26. So I'm going to talk about some themes that are macro themes, big themes that are meaningful to our industries, housing, mortgage, and whatnot. And I will start with a quote from Michael Altshuler, who I had to look up who he was. The bad news is time flies. The good news is you're the pilot. So how we manage our time and what we focus on, where your attention goes, your energy flows. Eric Thomas quote there. So let's get ready for 26. What are some things that we're focused on here? And I think a lot of us are focused on and probably want to hear about. And by the way, I'm a glass half full kind of guy. So, for all the ladies and gentlemen that come here to listen to me ramble for a few minutes twice a week, I'm not doing it for likes or follower count. I'm doing it to make an impact on this carefully curated group of followers. So I thank you very much. It's been an honor to do this for years and years and years. And by the way, we have the IMB, the Independent Mortgage Banker Show, coming up in Amelia Island, and it's coming up not too distant future. So let's make sure we get registered. It's a great show and a beautiful venue. And so we'll get some information in the comments down below, a link to register. So just a fantastic show. Mickey Schilling is going to be my co-chair this year. So I'm trying to carry on the torch from Laura Brandeo to Jason Stanger to myself and Mickey. We're going to have another great year serving. That's what we do in this industry. It's a service industry. So not serving ourselves, not serving ourselves. We are serving. So I'm here to educate. So supply and demand. Biggest theme in housing, it's always been that theme. And for decades, we've said we're undersupplied and we don't have enough housing out there. And that's starting to get tested, at least in the press. So I'll kind of get into that with some data, math, science, and facts, which is the only way to be, which should make you feel good about 26 and where we're at going forward. I know we've said AI to death, and we will again in 26, so I won't beat up that theme. But I think another one will be the states will step in, or regulators at the state level. We're going to hear that a lot because they haven't really done much this year, really, but they're gearing up to do it next year. And I think it's worth, mentioning that, there's some regulation that's coming around in a lot of these different states. I mean, I'm involved in multiple state organizations. I'm on the executive board of the California Mortgage Bankers Association. We work together very closely with the National MBA out of DC. And there's some policy coming up on the docket in February here in California, which, again, to quote University of Texas, what starts here changes the world. There's a lot of groupthink among regulators who, I've been seeing articles lately like the states are going to step in. Well, yeah, I mean, they're going to step in. But how, to what level will they step in? By and large, the states are not going to change the landscape, but some states will. And so we'll keep an eye on that. That is a theme for 26, just as we're looking at actual ROI on AI and how all of our AI projects are giving us return for our investment. We're going to see how the states actually stepped in and what has actually changed the impact the way we do business every single day, both in real estate and mortgage. By the way, consumers never stop spending. I mean, GDP numbers come out tomorrow. 70% of our gross domestic product is consumer spending. They never stop. They didn't stop during the dot-com bust in 01. They didn't stop in the global financial crisis by any material matter. We all got to buy stuff, right? And so is it discretionary items, or is it more what's called consumer staples, right? So I am not a financial advisor. I am not responsible for your losses, only your profits. Give you an example. If someone that normally doesn't shop at Walmart for groceries starts to, or if someone doesn't normally shop at Dollar Tree, but they're trading down from Macy's to Dollar Tree, that's a sign that people are hurting and they're still spending. You have needs, toilet paper, food, energy. Which, by the way, energy has not been volatile. So every single inflation report we see, there's the core number that strips out the less, the more volatile components, food and energy. Energy has been low for a long time and has stayed low. It's not volatile at all. It's one of the few components that's been low. Yeah, there's some month-to-month readings, and so we'll take a look at that data as it comes out and how the consumer is faring. But consumers never stop spending, and so it's hard if you're the Fed and you've got to look at inflation or data because you get month-to-month readings, and so they traditionally, with their groupthink, like to look back at 12 months of data and compare year-over-year numbers. But they do miss the boat of some changes that are happening more in real time. We know that new rents have come down. It's not the same to rent a house or to buy a house than it was a year ago. Same thing with food and energy prices. Although, again, like I said, energy has just remained low. So I think price per barrel of oil probably just stick around $60, maybe in a range from 55 to 65. And that's a good thing to put money in your pocket. This is supposed to be the busiest travel season ever, partly because energy prices, gas prices are low. And speaking of AI ROI, Tesla, the largest physical AI project in the world, they're going to release robotaxi. How will that disrupt and bring the prices down of mobility? Big theme. It will impact us. You guys hear me talk about it all the time. I know maybe I'm a super fan and the word Tesla might turn you off. I love being driven. I have a private driver that drives me around and I literally work. So I'm compressing and doing two things at once with my time. But back to housing, which is very seasonal. Of course, listings and people are pulling their listings off the market. But existing home sales has gone up. Last number in November, it was up. Existing home sales are up year over year, according to the National Association of Realtors. That's a good thing. And this isn't even seasonally the time of year when houses sell. It's the spring. So we'll take a look at this upcoming spring purchase season to get kind of a better barometer of how that 12-month look will be. Rates have been ticking lower. The 10-year Treasury yield has been in a range between 4.20 and 4. Okay, the Elon line, or as Bill Bardner likes to put, the Snoop line, and the perfect GPA, which when I graduated high school in 94, we only went to a 4-point, not a 5-point scale. 10-year Treasury has been kind of pretty stable, which means the longer rates stay at this low end of the range, the more borrowers start to get their affairs in order and make a move and buy and or sell a house. And 75% of home sellers are home buyers. So we're going to watch that trend. Don't believe the headlines you see. Of course, people take listings off the market from Thanksgiving to New Year's. Catch a flyer. Maybe you get the price you want to make you want to move. You didn't get it, didn't get enough traction. Pull that listing off the market. I don't want a stranger walking through my house. I didn't really want to sell for anything less than this unrealistic number during the holidays. And so you see that come down. Price cuts, listings coming down. The supply of homes went down from 4.4 months to 4.2 months. Cash buyers went up, which means the prices have gotten attractive. They went up year over year from 25% to 27%. First-time home buyers still make up 30% of all purchases, same as a year ago. So pretty stable. I would like to get into speaking of supply. Bank of America, shout out to B of A, $10 million, and it's a start. I know it seems like a drop in the bucket, but it was reported in the press that they're putting $10 million to work at zero interest rate loans through a CDFI to help for fire victims in Altadena and Pacific Palisades. So it's a great way to help get supply back on the market. Although at the local level, only about like 80 permits have been issued all year to replace houses that are burnt down, like 16,000 houses. So I digress there. So let's zoom back out and then get back into the Fed, okay? One of my stock subscription articles that I pay for so you don't have to, so I can regurgitate this information. Trump 2.0, tariffs and trade wars, AI bubble chatter and data center concerns, the ailing U.S. labor market and manufacturing sector, unprecedented federal government shutdown, longest ever, ongoing inflation fears, and the division within the federal court decision. These are all things that have made people fearful. Now, to get back to the stock market, it's a great discounting mechanism at a low, but not necessarily when stock prices are high because they get a little frothy, right? But we saw in April a floor got set in. And by the way, the Fed cutting rates is also putting a floor into the markets. They call it the Fed put. And so, this government is committed to growing our way out of the federal debt and deficit I think GDP will surprise to the upside. I mean, anything over 2.5 next year will be a surprise, I think, to a lot of people. 3% GDP and higher is where a lot of I've even seen 5% numbers out there in the most on the bull case out there. So we could grow our way out of the federal debt and deficit. But if the Supreme Court shoots down the tariff regime, which, by the way, we've always been in a trade war with China, always, and we're winning, by the way. And there's no other war. And so that floor got set in April. But if that tariff revenue is deemed unconstitutional, that's the only thing paying down our debt and deficit. So I could see the bond market having a little a burp, if you will, and not digesting that all too well, and maybe cause, at least in the short term of that announcement, a raise in interest rates. So be on the eye and look out for that. U.S. data concerns. I mean, robotaxi is going to be everywhere, and I will tell you, AI is obviously everywhere, and so that's not hype, like that's reality. But data center capital expenditures by all the major hyperscalers, it's not stopping. I mean, AI is going to be more than we could ever imagine, even though we talk about it a lot in the short term. So that brings me to groupthink at the Fed. We're going to have a new Fed chair, which should be announced in the coming weeks, and 4 of the voting members are out, and 4 new voting members will swap in, and there will be a new Fed board makeup. And so I think Fed cuts will be closer to 2 than 0, and not the 1 on the last dot plot, because labor is weakening. And so let's pivot into the gold standard of data, the most accurate data set ever collected in data that literally nobody but the MBS Highway crew talks about. I always look it up on, some large language model, and they do a good job of breaking it down even better. And so I'll try and say that. But we all look, everyone does, at the jobs report the first Friday of the month, now that we're back on track with the government not being shut down. Unless, of course, they shut down again in January, because Congress just shut down some bill to pass, healthcare incentives. And so if they can't come to agreement on that, we might have another shutdown. Which is, and also midterm elections next year, usually kind of choppy the first, half and maybe even Q3 of the year. But we'll bring some certainty in November on, is Congress going to be divided again, which is usually gridlock in DC and Congress is good for business. So, the quarterly census of employment and wages is the gold standard in data because employers like us, like you, we have to put unemployment insurance data into all of our state agencies, and then they send that data back to the Bureau of Labor Statistics, and about 5 to 7 months after the fact, they reconcile and come out with a quarterly CEW report. And guess what? Jobs are worse than previously reported. So at all the initial Friday jobs reports by the Bureau of Labor Statistics, 1.9 million jobs. Then they revised past months down to 1.5. Now this QCEW, which is basically July of 24 through June of this year, it's only 420,000 jobs. That's it. That's all that was created in that time frame. Went from 1.9 million to 1.5, and now with the gold standard of data, only 420,000 jobs in that year. It is weak. It is very weak. And so this groupthink at the Fed that's slow, like, why do we have to have labor break even worse? Why do we have to wait for what might happen, this and that, if inflation is on a nice runway, to wait and sacrifice more jobs of our fellow Americans before we cut the rates, which small business is the engine of job growth. That's the only place we're going to see it, really. Large companies like to use AI to cut jobs, but small businesses makes up 55% of hiring and jobs, and they need cheaper money and debt facilities to run their business. And so that will be a theme that we'll watch. But, this birth-death ratio, which is basically job companies opening versus job closings, has overstated job growth for a year and a half. And here we are with data to prove it, and they're wrong. And the Fed relies on that like it's the gospel. And they don't want to talk about the QCEW. However, I will give Jerome Powell some credit. He did say at his last press conference earlier this month, that the monthly job data has been overstated by the tune of about 60,000 jobs a month. And it may be worse than that. So, out of the 4 jobs every month reported, 4 to 5, only one of them was real. So people are not working and companies are not hiring. And we got to fix that in 26. Bad economic news is good news for interest rates, which is great for housing and mortgage-related businesses. So, shelter inflation's down. We talk about it all the time. Like home prices, they're still rising year over year on a macro level by over 2%, but there are some markets that are hurt. And so we know that's going to continue to press inflation down. So let's get ready for 26 and off to the gym. Have a great weekend. I'll get another one out to you again. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.